Welcome back. You're watching Political Exchange. My guest in the studio today is Paul Jordaan. He is the author or co-author of the Sims report, which the ANC commissioned into the state of the mineral sector in South Africa. Paul, just before we went to the break, we were talking a little bit about the the scope around ownership. I want to talk specifically now about what Sims says in terms of the Southern African region. It suggests the setting up of a regional development fund to invest in Southern Africa's infrastructure to increase regional trade. Just take us through what Sims is recommending in terms of making sure that the mining sector fits into overall integration into SADC.
Yes, that was one of the important recommendations of Sims. Is it recognizes that in today's world one needs much larger markets like the EU or Mercosur, or China is a massive market in itself for NAFTA in North America, and that if we really are going to maximize the industrial linkages arising out of mining, we need a bigger market. In that regard, you're well aware that in SADC several countries are booming because of minerals, because of the Asian boom and higher prices and so on. And in fact, there's been a recent study showing that South African export of mining capital goods, machinery, equipment, has in fact boomed as well to the region. And we're saying this needs to be encouraged. Plus, of course, there are imports we can get in terms of minerals. There are minerals we do not have, that feedstocks, etc., from the region. And we believe that South Africa could enter this boom more effectively, and not only South Africa, all the states in Southern Africa, if we were linked. An example is that Angola has been booming because of the price of oil, etc., but there is no
refinery.
There's no link for us to export to Angola. We've got to send it down to Cape Town and send it up on a coaster, or trucks go on the sort of bad to non-existent roads across to Namibia and then up to Luanda. So we have recommended very strongly on the fiscal linkage that one does not need to own in order to get a share of the rents. You can use taxes, and we strongly recommend the least distortionary tax, which is a resource rent tax, such like Papua New Guinea or Australia, or in hydrocarbons, most countries have a tax on profitability rather than on pure profit. We've said that part of that money should be kept in an offshore fund to not strengthen our currency, to avoid the Dutch disease, and that sovereign wealth fund should have this, what we call this regional development fund, to invest in the development of the infrastructure so that the countries in the region can develop through trading with each other. We think that's essential. I mean, SADC has a population of something like 200 million compared to our 50 million, and that's also the way of the world at the moment. We need larger markets, and we also suggested extension of the customs union. We suggested a free trade area for particular feedstocks, such as the Europeans did with steel and coal, maybe to start with. But I think it's unity is strength. We need to do it.
Those are some of the recommendations in terms of, what we need to do in SADC. Let's turn our focus internally. Some of the recommendations to better manage the mineral energy complex, as you describe it in the document, talks about some of the political changes that are necessary. For example, the creation of a so-called super economics ministry. Now, the ANC doesn't necessarily have an appetite for this. The idea of a two-tier cabinet was shot down when President Jacob Zuma assumed power in 2009. Tell us a little bit more about what kind of political changes would have to come about to manage this mineral energy complex better in terms of the recommendations in the report.
Well, the report recommends two alternatives. One, we were asked to look at best practice, and we saw that many of the successful countries, mining wasn't a separate ministry, it was part of industry, or like part of the Ministry of Enterprise in Sweden, or part of the Ministry of Employment and Economy in Finland, or part of Trade and Industry in Norway, just as examples. If you're going to the linkages from minerals are into industry, both the downstream and the upstream, so the backward and forward. If you separate minerals out, your main lever is in the minerals which are released, then gets disconnected from your objectives. So we said, one, you could do a super ministry. The other is something like the PICC, the Presidential Infrastructure Coordinating Commission, to have a PICC for the MEC, for the Minerals Energy Complex. It's not an issue of a super ministry or not, it's an issue of coordination. And we did indicate that we felt that there hadn't been very good coordination between minerals and industry in the last 18 years.
But when President Zuma came in, the executive was refashioned, and one of the things that was done was to split minerals and energies. Is that split something that helps with what you're suggesting, or is it something, what you're suggesting, is it completely different?
No, we're talking more, look, you've got the minerals, you've got energy. They are both feedstocks into industry, and they are markets for industry. What we're saying is that group needs to be one. It doesn't have to be one ministry, so long as there is a clear cluster, but a cluster with capacity and a cluster where, you know, ministers aren't going to decide on a strategy, then walk out.
Do you want to break away from silo thinking?
Yeah, you know, I always call it the Frank Sinatra syndrome. I'll do it my way, where you find that in all governments, everywhere I've worked. You find ministers are political animals, and they don't really like giving kudos to other ministers. So we need somehow to ensure that coordination happens, so that our minerals, while we have them, are optimized in terms of the developmental or the catalyzing impact they can have on the rest of the economy, and aren't just dug out the ground and sent overseas with only maybe some fiscal impact.
Now, earlier on we spoke about beneficiation as one of the most important issues. How do we, how does SIMS, for example, argue that companies be brought onto, you know, the beneficiation bandwagon? Are we talking about punitive action against those who don't? And is this likely to scare off investors?
Now, what SIMS says is a variety of things around that. First of all, we actually list the forward linkages, which are beneficiation, as number 3. The research showed that much more important was capital goods, was in fact the backward linkages, because it's not always economic to go to the next step. So what we said is, in each case, we should see if the next step is viable. And if it's viable, bring in a series of carrots and sticks. So on an export tax, for instance, we said that should be very carefully imposed, but only where the next step is viable, and maybe where the company involved, and this happens often, happens to have excess capacity somewhere else. And although there's a viable case for doing it in South Africa, they don't, because they have excess capacity in another country. So a blanket export tax, and it was misread by some of the private sector, was never said. It was said where there is a viable case. And then if there's a viable case, you know, the industry for some other reasons aren't doing it. The other method we said, we felt that the system of free mining that we have, which is pretty much like the Canadian, Australian systems of free entry, needed to be changed, that for known mineral resources, like for other known state assets, they should go out to transparent public tender. And that's where you can have then the private sector bidding what they're comfortable with. Once you know that you are bidding and say your forward and backward linkages are going to count X number of points, they then can bid what they're comfortable with. If they come back and say, well, you know, we don't do that anymore, core competence, we only dig dirt, you know, we don't do downstream, etc., then they'd obviously have to bid with partners.
Paul, let me just ask you quickly, you also talk about the need for a minerals commission. And that wasn't, you know, really reported on, but what exactly are you talking about, and what is this minerals commission meant to do?
The minerals commission was because the the allocation and promotion of minerals is quite a complex issue, especially if you go into this type of public tender, transparent and competitive tenders, where you try and then test the market for what the private sector is comfortable. Then you don't have problems of using carrots and sticks. You put it out, you say, this is our wish list for development, and they come back and say, well, this is how far we meant to go, and then you have a very good long-term contract, because, you know, they give what they've bid and they're comfortable with, and you obviously select the best, and you're comfortable with that. Rather than this coming in the back door and staking a claim over a mineral that's already known.
And how should this commission function?
So the commission would have to handle that, which is complex. I've done mineral auctions in other countries, and they're very complex. There's also lots of areas for things to get subverted. In some countries we've had a lot of corruption around it, not here because we don't do it, but in some of the other countries. Obviously it's a target for people trying to get an inside lane. So the Minerals Commission, the idea is something like SARS, to be an independent agency, but not create something new. Use the current Minerals Development Board, build it out, start there, and then eventually, already it's in the Act, but maybe its own Act, so it can act independently, and to try and protect it from political and commercial influence of trying to subvert these tenders, and also to make sure that we've had a lot of disquiet around how these rights have been issued. You've seen things in the courts about it, to try and professionalize that and make it still under the ministry, but a separate agency.
Excellent. Paul, we have to leave it there. That's it for tonight's edition of Political Exchange. Join us again tomorrow night. I'm Karima Brown. Goodbye.